Hi there, this is Alvin from Dr. Wealth. Donald Trump has just launched his most aggressive trade tariffs against the whole world. Yes, whole world. There is no country that is going to escape from this. The baseline tariffs is going to be 10%. So any country that trades with the US, the imports into US will cost at least 10% more. It's not equal across the world, so some countries are going to pay a lot more than the others. And he has a list, okay, and we are not going to go through every single country, so I'll give you some snippets. These are the ones that have the highest tariffs. You can see there are more than like 40% tariffs, and China is at 34%, but don't get misled by that number because China has already been imposed with a 20% tax, and add together you're talking about 54% tariffs. So goods that's going to be imported into US from China is going to cost 54% more. And this is something that is very shocking, right, for the market to digest. Later we'll talk about the market impact. And let's look at the other trading partners that have an easier time, but still not really, because they have like still a 20-30% tax slapped onto them. So even Taiwan with TSMC that does a lot of deals with the US chip companies are going to see a 32% trade tariffs, and Switzerland 31%. We look at India with 26%, Japan at 24%, Malaysia at 24%, and EU as a whole is at 20%. So all these are pretty high numbers, and therefore we can really expect that goods in the US are likely to go up, right? Because it is very possible that the sellers will, it could be sellers, distributors, wholesalers will start to raise the prices to pass on these tariffs costs to the end consumers. We don't know how much it will be absorbed. We don't know what is the ultimate demand after all these price changes. So everything is in a flux. So we are not able to give a very good assessment what's going to happen. And of course, because of this uncertainty, markets are starting to see a lot of sell-off. And actually, when the US closed on 2nd April, it was still fine, right? The indices actually closed up, but it was a different story in a post-market, which we will see here, right? So these are the futures market that gives us an indication after the cash market or the small market is closed. We can see that the Nasdaq 100 is down the most at 3.22%. And that is still okay because at one point it was minus 4%. So it's recovered some grounds, recovered from some of the shock. And S&P 500 was down almost 3% at one point, and now it's about 2.76%. And Dow Jones Index is lost about 2%. And Europe has yet to open at the time of recording, and we are also looking at the futures. Therefore, it's also down about 1.87%. So you can see the impact is beyond just US market. And if we look at Asia markets are trading about midday now, and the biggest impact was actually Vietnam. The Vietnam 30 is down 6.17%, and Japan was also hit quite badly, about 3%. In fact, Japan's stocks have been down for the last whole month in tandem with the US markets. Hang Seng, surprisingly, right, despite China being levied of a 54% trade tariffs, and they are down 1.78%. Okay, but later we can see the impact is pretty much heavier in a certain group of stocks that does a lot of business with the US. Okay, the rest seems normal, right? Thailand, Australia, Korea, KLCI, even the Indian stock market, they are down like less than 1% today. So the impact seems to be okay, right? At least for Asia as a whole, but the impact to US is more than Asia, right? Which is funny because this is supposed to be retaliation of what other countries are so-called taking advantage of the US, as what Donald Trump has said, that they have always been taxing American goods, but their own goods in American soil are not being taxed. So now Trump is just retaliating. Okay, you can see that the amount of taxes that he levied on the others are based on so-called reciprocation. So let's say country A taxes US 50%, and US is just going to return half of it, right? 25% tariffs. Okay, so in that sense, Trump feel that this is fair, and it should actually hurt the exporters to US, but somehow the market see a bigger sell-off in the import country, which is US in this case, while the rest are less impacted. Okay? Of course, I said Vietnam has quite a big hit. And if we look a bit deeper into the individual stocks, okay, so I know that nowadays investors are very concerned about the AI story as well as the big tech because they have fallen quite a fair bit from their highs. If you take a look at the Max 7, you can see that they're all down after hours, and we can see they are down more than 3%. Alphabet and Microsoft down to 3 to 3.57%, and Meta platform 4.83%. Nvidia already slid quite a fair bit, is down 5.68%. Amazon down 6.1%. Apple and Tesla are the heaviest casualty in these trade tariffs. Apple probably because most of the production are overseas and they are going to import to US, so they're going to get a hit for quite a fair bit. And because Elon Musk is very close to Donald Trump in this term, and now Donald Trump seems to be like a public enemy number one, so therefore it is possible one way to vent anger on Trump indirectly is to drag down Tesla shares, okay, which is owned largely by Elon Musk. So that is how I think is going on, right? So it's deeper than that. It's not just the tariffs itself. And these are the group of stocks that have been hit harder than, say, the Max 7 or AI stock. These are your apparel stocks. It could be footwear as well. It could be sportswear, whichever. Okay, we can see this list of stocks that have dropped like 6 to 13%. Crocs is down 12.59%, right? Deckers that owns Hoka is down 11.85%. Lululemon is down 11.5%. Okay, so all these are likely a lot of overseas manufacturing, and then to bring their apparel back to US to sell, and that's where these tariffs will hit them very heavily, especially if it's China, and which is the case, or even Vietnam, right? So the tariffs, as you can see just now, is like what, 40 to 50%. So these are the most obvious casualty. And even in Asia, okay, so these are the stocks that are the OEM manufacturers. So they are the factory owners. They are the one that churns out the goods for Nike, goods for Lululemon, and they slap their brand on it and then they ship it back. So they're also likely to see some sacrifice that they have to make down the road, right? Probably because lower orders due to the prices that shot up so much, so lower demand, and the sport brands or the fashion brands labels will start to lower their demand, order less, and therefore their revenue are expected to drop. So you can see the market always try to factor in some of these future impacts today. And if we take a look at a bit of technical analysis, okay, so this is the S&P 500 stock chart, and the red line, the red curve that you can see across the screen is the 200-day moving average. And what this signifies is that usually if the prices are above the 200-day moving average, is considered bullish, and if the prices are below, it's considered bearish. As you can see, the index is below the 200-day moving average, which means that it is kind of bearish, and it tried to break above last week, and it did, but it couldn't stay on top of it for more than 2 days. And then it went back down, and even though last 3 days was encouraging because it opened low, close high, open low, close high, open low, close high, there was signs that, hey, maybe it wasn't that bad. But once the announcement was out, right, so this chart has not incorporated the 3% drop in S&P 500. So if we incorporate that, it's very likely that a new low, right, probably a new 1 year low could have been made. Okay, oh no, it's less than 1 year. Maybe a new 6-month low has been made. Okay, so that again will reinforce the bearishness of the US stocks in general. So I would say that definitely now there could be more short-term pain in the US stocks. It's not done yet. And there could also be retaliation from other countries when it comes to these trade tariffs. So those who are hanging on to US stocks, be prepared okay, psychologically. Maybe if it's meant for long-term investing, right, then don't take a look at it. Go and do something else at this point in time. And it's not that there's nowhere to hide. There are still some assets that are going up, like your gold. Gold just break new high again at a high of $3,126 per ounce. Okay, so a lot of people are saying it's expensive, but it's just keep going up and up and up. And we don't know, right, how high it will go. But gold is usually not really a main investment assets, but it could be one of your allocation. And if you have that, then congratulations, right? So it is doing well, and that is one of safe haven, okay, against probably the US dollar, right? Because now US is indebted, and then we talk about these tariffs. Maybe trade will slow down, the demand for US dollar will not be as high, so gold become the next best alternative to US dollars. And even bonds, right? So this is the chart of the bonds. Bonds have not been doing well because of the rate hikes, and bond prices have fell, and the yield curve has also been not stable. It fluctuate a lot, move up down. Even though that there was interest rate cuts that were coming, and that didn't really help, because now the Federal Reserve is also holding off the speed of the rate cut, and that really don't give a lot of boost to bond prices. But now with another factor coming in, right? Because usually when there's a lot of fear in the market, investors will start to look for safety assets. So bonds is definitely one of the safety assets, and bond price actually, this TLT, right, ticker TLT, which is a 20+ year bond ETF, actually went up about 1+%. I think it's about 1.3% during after market hours when all these stocks were going down, right? So this protection seems to be working this time around as well, right, as with the past crises. So it's not just an interest rate thing that will help bond prices go up. There could be other factors like fear that's in the stock market, okay, that will also increase the demand for bond and drive out the prices. Okay, so in summary, market is going to remain volatile, right? Because the news are just out, and it takes time for the market to digest because we don't know the outcome yet as well. Okay, so we have to, investors will all try to guess, okay, what is the impact, then they will see what is a good price to buy or sell the stock. And because of all this uncertainty and all this price discovery going on, it will take time to settle down. And the S&P 500 is below its 200-day moving average, and that is usually bearish. So some caution. It's not an issue if you're a long-term investor or a dollar cost average investor where you just keep buying monthly and you just get buying lower and lower, cheaper and cheaper, and you get more and more units. And for long-term investors, you're right through this short-term drawdown, right? It could be worse. It could go down another 10%, who knows? But if you hold long enough, the prices will recover, right? We are talking about well-diversified stock index, okay? We're not talking about individual stocks where you would really need to understand the business a lot better, whether it can survive and prosper in the long term, okay? It's very different from whether it is a well-diversified stock index. And short-term traders probably shouldn't long aggressively now, right? Now, that's not the time, okay? Don't go and bet that, okay, I think this is the low, I think it will rebound. Market doesn't care what you think, okay? It moves where it wants to move, and therefore be a bit careful on that as well. And lastly, those who pick stocks, growth guys, value guys, dividend guys, we should see that it's not just the US stocks that's getting hit, right? You can see that Asian stocks got hit, just not as badly, but I would think that there will be some impact, and there will be some fear. There will be transferred to other regions, even in Europe, in Asia Pacific. So we may see some sell downs in the respective stock market as well. Then there comes the opportunity, right? So you may be able to buy some stocks at more reasonable prices, and of course those may be less impacted by all these tariffs because their business are mainly in domestic market. Then you'll be fine, right? So you hope that opportunities come your way. Yes, market is volatile, but stay safe and be rational. Don't make irrational, rash decision. Invest safe, invest confidently. Thanks for watching. Give me a thumbs up, like this video, and I'll see you in the next one. Goodbye.